Rapid spread of COVID-19 has raised fears of a global recession. Panic selling has already wiped $5 trillion off the world's stocks. Yes, you heard right, $5 trillion. Trading was volatile on the New York Stock Exchange yesterday. Let's find out how the markets are doing today. Our U.S. correspondent William Denslow bringing us the latest from New York. William, we're just looking at the reports. We're seeing stock markets in the U.S. posting some of their worst ever losses as the coronavirus sparking these massive sell-offs. Just how bad is it today?
Well, as you might expect, there are yet more losses for Wall Street. As we've seen so far, the market's been open for just a couple of hours here in New York, and already the Dow Jones is down over 3%, the S&P 500 down near 3%, with the tech-heavy Nasdaq down over 2%. Now, in Wall Street, investors are bracing for what is seen as the worst week potentially of trading, unless there's a remarkable recovery in afternoon trading here in New York on Friday. It's expected to be the worst week for Wall Street since 2008 and the global financial crisis. So that just puts into perspective just how bad US markets and global markets have been hit. As there are real concerns for investors what this COVID-19 outbreak will mean for the global economy.
William, for those like myself who don't quite understand how the stock markets work and, you know, what the wheeling and dealing is and what affects it, can you explain to us how this happens, how something like coronavirus would lead to this kind of panic?
Absolutely. Essentially, the fear from investors is the impact this will have on multinational companies and global economies. Some analysts warn that if a pandemic was to arise from COVID-19, there are fears that we could enter a global recession. Now, essentially, the concerns felt here on Wall Street specifically are the impacts this will have on some major companies, the likes of Apple, that have already said they're not going to hit their quarterly targets. A major reason for that is the fact that companies like Apple that have a huge presence in China, they've already said that because of the disruptions when it comes to their manufacturing plants in China as well as sales in China, they're not going to hit those quarterly goals. Now, this is being felt not just from a company like Apple, but across a number of industries. We've seen the likes of Nike as well as United Airlines already saying they're not going to hit their quarterly earnings forecast. We've seen Microsoft as well say that that'll be the case as well. The real fear from analysts is that this not only impacts the company's bottom line, but from those big companies, those big ticker companies that you might have heard of. But this has an impact up and down the supply chain, given the fact that these huge companies like your Apples rely on a number of different companies all across the supply chain. And if there's concerns about labour being able to get to these manufacturing plants, then manufacturing supplies managing to get to these companies, then there are real issues up and down economies around the world.
Now, other observers, William, suggesting that these sell-offs might be a little bit premature. I mean, does it seem like this is just, you know, a massive panic blip, if I were to call it that, and that it might subside in a couple of hours, a couple of days? How long are we actually expecting this to last?
That's certainly the message from the Trump administration, really urging caution at this point. But there's certainly a degree of concern. We can see just from the markets alone when the president addressed the people of the United States on Wednesday, really pushing out Washington's message to the American people. Investors certainly didn't see it at that stage. Of course, we've heard from the World Health Organization this week stating that there are real concerns that this could become a global pandemic. We've also heard from analysts at Goldman Sachs. They warn that US companies will make zero growth when it comes to their bottom lines in 2020 because of concerns of COVID-19. So certainly, while many here in the US will be hoping for the best, investors, at least on Wall Street, are certainly taking the stance that this could become an awful lot worse before it gets better.
So, I mean, you know, the likes of Donald Trump being highly criticized, the other world leaders for how they've actually handled this crisis. And the word out there is that the usual methods for stopping investor panic are not going to work when it comes to coronavirus. Now, it's an unseen threat. You know, it's very difficult to spot sometimes until it's too late. So is there a plan? Who's talking and what plans are they making?
Well, essentially the message from the Trump administration is that they're doing all they can. There are efforts to increase the amount of testing in the United States, and of course we've seen around the world a number of efforts to try and introduce quarantine zones and really to stop the spread of COVID-19. Of course, the message from the World Health Organization is that it's not a pandemic yet, but that is a huge concern. Of course, we've seen now more cases seen outside of China than we've seen in China. That is a major concern for global leaders to try and address. We've seen a number of cancellation of high-profile events such as the Geneva Car Show, and that's just one example of instances seen around the world. Here in the United States as well, of course, the likes of San Francisco declared a state of emergency to try and get preparations in place. So certainly this is an effort we're seeing from both companies around the world as well as leaders in the United States. There are certainly pointing fingers increasingly at the Trump administration, accusations that they haven't done enough, accusations of cuts to the CDC, the Centers for Disease Control and Prevention. The message from the Trump administration is that they've been ahead of this and they're doing all they can to contain it.
Okay, well, we'll leave it there for now. Continue to watch those numbers. Thanks very much, William Denzelo in New York. Well, it's